these are the two trades that I took today, and I'll go over both of them. This first trade was just 3.5 points on ES. Still growing into understanding that my drawn liquidity is right, and holding for these bigger moves are still scary for me personally. I am still pretty decently new to trading ICT concepts, so bear with me. But my idea and drawn liquidity was completely correct this morning and in the afternoon session. So the first thing I always do, like I told you guys before, 8:30 midnight opening price. Midnight is more important than 8:30 in my opinion, but um, this is what I was looking at with these two prices. So I normally always like to start on the 15 minute, and what we had, this was our 10 a.m. high from yesterday. So that high got swept. You always look for some form of buy side liquidity to get swept before you're looking for your actual move. So this high has more importance since it is a news candle. News candles high and lows you want to pay attention to if the high or low is not taken. So as you guys know, what do I look for? A change in the state of delivery after buy side liquidity gets swept. I'm still bearish. You guys see my other video about the 4-hour time frame. I'm expecting the draw for the end of this week or Thursday into Friday. This 826 level on NQ. So what I was looking for, I was waiting to see if we would close below this candle, and after that I was looking for a fair value gap, which is right here on the 5 minute, and that's what I was basing my trade off of. So now we have a change in the state of delivery on the 15 minute after buy side liquidity gets swept, and that buy side liquidity was that news candle high. So I'm gonna drop a gem right here for you guys. So we had a 5 minute fair value gap, right? Mark that out. Um, and what I was looking at was the 1 minute time frame after we engaged with this 5 minute. So when you have a fair value gap and the fair value gap gets traded to the absolute high or the low, in this case it's the high, you can see that price goes all the way through it, and so it rebalances the entire inefficiency, right? So if we go to the 1 minute, you can see even though the body is telling the story, it's respecting this the 5 minute, right? You can see the bodies aren't closing inside of it. But if you go to the 1 minute, you can see that we have this wick up here. This is what ICT calls an intermediate term high. This is a protected high if the drawn liquidity is lower. And this is how you're able to have really good risk to reward trades. And what I was looking at was this 1 minute fair value gap. I actually didn't even wait for this fair value gap tap just in case it wanted to leave it open, but I knew that this high was going to be protected if my drawn liquidity was correct. So your entries don't have to be perfect, but I did enter at 9:49. I entered on this candle. I entered on this down close candle right here. And what I was looking at on the 15 minute, once again, let me zoom out. When you are bearish or bullish, but in this case we are bearish, we have our midnight opening price. What do we have resting below our midnight? And I still had that drawn liquidity for the rest of this week at this 4-hour low. So let me show you guys this 4-hour low first. This 4-hour low is that same one on NQ. So 50.60 is my drawn liquidity for the rest of this week. You look at the 15 minute, we have our midnight price with, this is our original consolidation, part of it, clustered lows right outside of the midnight opening price. When you have lows right beneath the midnight opening price and your drawn liquidity is lower, this is a magnet. And you can see that we have equal lows here. That's exactly where I knew price was going to go. So shortly after, I got filled on at 9:49, and like I said, I should have held for those midnight lows. They're just like 5 or 10 points. 10 points since it's more volatile. But like I said, I'm still new in just learning to trust myself and my trades, and I just sold for 3.5 points. Also, the little divergence that was happening between the indices, NQ was just bleeding while ES, excuse me, wasn't really moving. So that kind of shook me out, but I just need to be confident in knowing where my drawn liquidity is. But nonetheless, this trade still made me money. So now the other trade that I took was a PM session short on NQ. So with that logic being applied, let me find where I took my short. Here we go. So if I go to the daily time frame, this was what I was looking at to act as resistance. This is a daily BPR. All a BPR is two fair value gaps that line up. You can see that we had a bullish fair value gap, and now this is a bearish fair value gap. You can see that was created, but this bullish fair value gap got violated, so now a lot of people know that as an inverse fair value gap. The real term, the correct term, is a balanced price range, or BPR. So if you go to the 4 hour, what do we have? I was looking at this down close candle, and if you look at the 1 hour, you can tell that it's a breaker. High, low, higher high, lower low, right? So I was expecting that to act as support, or resistance, excuse me. You can see that we had a bunch of manipulation, big wick up into this area, taps to CE of that daily BPR. But more importantly, you can see that we're wicking off of this 4 hour breaker. And this was what I was looking at. If we were going to continue lower, we should respect this area. I would not want to see a candle close above this, and more importantly, the 50%. And this is what I was telling some of the guys in Discord. You see how the body of this candle is marked out? The 50% of it, the bodies aren't closing over that. That's a very good sign. The wicks do the damage. We understand that. It's NFP week. It's a lot more volatility than normally, but you can capitalize that if you understand the draw and liquidity and you are confident in your risk management. So with all that being said, let me delete this. But we were inside of that BPR, and all I was waiting for is the signature in price for us to continue lower. What do we have? We have this. These lines are that high and the open of the 4 hour breaker. The gray box is still that BPR. So you can see that price has a almost 100 candle dump. Two 1 minute candles, almost 100 points. That's what ICT is talking about. That this is real displacement when you have this. That's what he means. So now, what do we have? We have our series of up close candles here, here, or here. Either one you could all use, but we are just respecting this fair value gap. Once again, I didn't short any of this. I wasn't interested. I was still wanting to see if this was going to hold. And if you go to the 4 minute time frame, it is very clean. I'm going to delete this stuff now. You guys understand where we're rejecting from. You can see if I draw another fair value gap with the mean threshold, look at the bodies of the candles telling the story as always. So if I play price once again, more displacement, and this is where I was looking for my short. So we had a bunch of displacement once again from high to low. That is another 100-point drop. So that's why you have to be careful in knowing when to press buttons or not. These candles are very volatile. What do we have? We have our low that got taken, but if you zoom out, which is very important, don't get sucked into the 1 minute. What do we have? Relative equal lows down here, right? Look at this here, and our draw is still down here, 826, right? We have all these lows in here, but this was NQ's low of day. But you don't even have to target that to make money, and you'll see what I did. But I know I'm confident to be able to hold my position lower because I know that the algorithm is targeting lower prices. So we had a fair value gap get created. Price is respecting that very well. You can see bodies of the candles not getting close to 50%. It's exactly what you want to see. Then we had a inverted fair value gap, or I don't like to use that, but BPR being disrespected. So we have a bullish fair value gap being disrespected, and then a bearish fair value gap getting created. And so now this up close candle is now your order block. You draw that out. Look at the candle bodies, pretty much perfect. NFP week, you can't expect complete precision. You can see the wicks are doing the damage once again. People's stop losses are trailed to these bodies, so that's how you are getting your manipulation. And you can see that price isn't completely respecting this fair value gap. It is respecting the order block, however. So if I draw that out, you can see the entire candle. The candle bodies are respecting 50%. Now look at if you draw out just the bodies. Just the body of this candle, look at the candle bodies, refusing to close over the mean threshold. That's algorithmic precision. So if I continue to play price, what was I looking for? This is all I was looking for. I wasn't fearful that this price was going to support. Why? Because we had engineered lows right here. This is a signature in price that always occurs. When you have clusters of lows and your draw is still lower, this is a high probability area to be able to look to take profit. Personally, I don't like to take profit when there's long wicks like this, especially in an NFP week. So I did sell early once again, but I will go over that before. So there was no fair value gap up here, but that was created on this leg down, but all I was entering off of was just another tap inside of this fair value gap. So I waited. I got filled right here at 69.25. Nothing too crazy. I did have a pretty wide stop loss, but it was needed. So I did have my stop all the way at this high because I didn't want to risk putting it at here just for a few more points to be safe, right? So from here to here, it's only another 5 points. I can live with another 5 point difference. The reason why this trade, as soon as I saw it, I knew I wanted to get in, is because there was SMT. So let me get there with ES first. Here we are. You can see that. Here we are, right here. This is where I got filled at 212. And here is 212. We have these highs right here. This high, 159, 207. 159, 207. NQ fails to take out this high at 159. That immediately tells me that if the drawn liquidity is still lower, there's no speaking probabilities in this game. So if the probability of price going lower is in my favor, this high should now be protected. And you can see that's exactly what happened. So I didn't even hold for this low or this low. I was just targeting these bodies right here of the candles, just because like I said, NFP still learning to trust my draw and liquidity, but I got my TP hit in 2 candles, and this was an absolute banger of a trade. You can see down here, trade ovate, right here. I took 2 losses on a micro, but here's the 3-point win, and that 27-point banger right there. So full proof. I'm not here to hide anything, but this is all for that video. If you guys have any questions, let me know in the comment section below, and I'll see you in the next one.